What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for about 7 years now and part of the Chart Guys team for about half that, where I head up our futures room and our swing report. So in this video, we're going to try something new here. I'm going to start releasing the market wins section of the swing report, which is where we just kind of cover the overall market. And going forward, we're going to put more emphasis on hot sectors that have a lot of hype, a lot of attention around them, because typically it's easier to trade with these assets when there's a lot of attention on them. So there will be trade ideas shared in these videos, but for play-by-plays and for specific picks within these hot sectors, we're going to keep those for the subscribers. So without further ado, let us get into it. So starting off with the overall market stuff with SPY here. So SPY on Friday, obviously we had a new breakout as we were talking about for, I don't know, weeks now. Despite the strong selling on this day, as long as the sellers could not get back under 478.60, then they don't really create any change relative to this breakout. And so we had to keep an open mind to sideways to higher. It's a very straightforward way of looking at the market. Basically, if the buyers break out and the sellers step into the market, if they can't get back to at least a breakout point, well, how strong are these sellers? Not very strong, right? You can just look at it like a military campaign, right? If you have fortified an area, you advance out of that fortification, the opposing force pushes you back, but not so far back that you don't even return to your fortification for where you have, a garrison. Well, then you're still pressing the advance, right? So daily higher low has been set here at 482.86 on the SPY. And we talked about this as well, right? The idea that because we had all of these lows that were very close to each other, that this was the potential, it was a good setup for a liquidation break where the stops from here and here and here and here and here and here and here, they all got triggered on this day. But you'll notice the sellers stopped pretty much right here. They actually didn't even close this gap. They didn't even close this gap. You see how there's a tiny little gap here from this session to this. The high of this session is 482.72. The low of this session is 482.78. So on this day, after this gap up, the goal for the sellers, step number one, is to get back into this day's range, which they failed to do. They failed to do that again here. The low of this candle is 482.86. So as of right now, the sellers really aren't improving that much. Doesn't mean that more meaningful selling can't enter the market next week, but as of right now, the buyers are positioned very well. They're very comfortable right now. There's really no red flags for these buyers as of yet. So that's pretty much it. Space for the daily higher low. And even if we do lose that daily higher low support, there's space for a weekly higher low as well over 466.43. So in the near term, again, as long as this daily no change level is not violated, 478.60, the buyers have really nothing to worry about. So if you're looking for that higher low now on the SPY next week, you can pretty much use this entire area, right? So the same can now be said essentially for this daily no change. Now that they've broken out of this high, right? The idea is if they can't get back under this guy, 491.62, well then this breakout's not been negated. Now I'm not going to move this yet because we're not really quite sure if this is a real breakout yet, right? We could very easily come back down into this range, go sideways a bit, but as long as we don't come back into here, it's all good. You see what I'm saying? Like what's happened here. Higher high, no follow through, come back into the range. Higher high, no follow through, come back into the range. We could be seeing that. And just like over here, as long as they didn't come back into this area of demand, this trend was fine. It's the same can be said for right now. As long as these sellers can't get back in here, these buyers are doing fine. So I'm not too interested in looking for something as of right now for the SPY. But if you are looking for that daily higher low, something like this would be pretty reasonable. Something like this, your stop would be under here. And your initial profit taking should be this guy here. And then if it sticks, great. If we look at like projections for pivots, we're already at the R1 for the month. And as long as we're holding over this pivot, they should be trying to move up to the R1 for the year, 509.30. So something like that is what is pretty reasonable. But I will likely trade this next move with futures, but I'm probably not going to do it like this. I need to see some more information. But futures gang, hang tight. Moving on to the Qs here. So the Qs had this breakdown as well. Same deal. 412.92 is the daily no change level. This is the breakout level. As long as the sellers can't get back under 412.92, then they're not doing a very good job of negating this last breakout. In fact, they've not done a good job at all. They've not done a job of negating that breakout. Okay, so space for a higher low now over 416.79 next week. Weekly time frame is pretty similar. We're still just technically this is potentially a little rinky-dink higher low being set here. I think we did break over this high. So technically a little rinky-dink higher low has been set here. I don't really care about it so much. Personally, I think this one, 395.34, is far more meaningful. But either way, buyers are also very comfortable here. Now, again, this could be a higher high, the next follow through, and if we come back down to this range, that'll be an initial red flag for these buyers. But again, as long as they don't come back down into here, no problem. Like we could be looking at a bunch of sideways just like this, right? Where you have some higher highs like follow through, come back down. That's problematic. But if they don't clear the last breakout zone, right? If they can't get back to the last breakout zone, then the buyers will still be very comfortable. So we'll stay frosty for that. Eyes on 412.92, that's that key level. Anything over 416.79, good for a daily higher low. Moving on to the Dow. So the Dow is in a very similar situation, just broke out of here. So here's the daily no change level. As long as these buyers are holding over 378.25, they have nothing to worry about. Just set a new higher low here at 380.97. Anything over that will be good for another daily higher low. Again, open mind to us just balancing over this guy. We don't have to keep ripping. We could keep ripping, but even if we don't keep ripping, as long as we hold over 378.25, again, buyers very comfortable. So really no red flags out there. Weekly time frame still very comfortable as well. Space for a higher low over 371.34. That's it. No red flag for the buyers in the Dow. IWM is very interesting, right? Because IWM is testing this super key structure here, 113 to 422. That's this guy. You can see how it was problematic here, problematic here, problematic here, right? So the goal for these buyers, if they want to leave all of this area, all of this balance, and leave it behind as a demand zone, they'll have to get back over 199.26. You can see how reactive it's been even in this local data here. Grinding the point of control as resistance for multiple sessions. You finally pop above. Where do you find problems? Pretty much exactly the value area high to the tick. Come back down, back test the point of control, try to hold it, fail, grind the value area low of the structure, and then all of this price action here, right? If I hide this, all of this price action here is pretty much dictated by the value area low and the point of control of this 113 to 422 structure. Pretty much a perfect rejection from the point of control, many value area low holds. And now this was a red flag for these buyers, right? The fact that they rejected from the point of control and broke down back under the value area low. But the sellers did not do a good job throughout these two sessions building on the selling from here. So if these buyers in the next coming week can find acceptance over 194.84, it's right back to looking for a test of 199.26. And if they can flip 199.26 again, it's right back to looking at 205.46. The more acceptance you can find over 199.26, the more confident these buyers will be in eating up the supply that's being offered in this zone. Basically the buyers right now have to consume all of the supply in here in order to have a go at all of this supply overhead, right? This much more meaningful supply overhead. So that's it. Technically, you do have a weekly lower high that's been set, but these buyers could also set a higher low here. So in the next week, if they get a nice big bounce, come back into this structure, the odds of this being a weekly higher low would improve. Okay. So that is pretty much it for the IWM. That's pretty much it for the IWM. So IWM, if you're looking for a bit of a laggard play, it's very reasonable to be looking for something like this, right? If we come back over this low, back test this guy, very reasonable to try a buy here, throw your stop under here, target this and target this. Very, very reasonable if you get a move higher on Monday first. Okay. Moving on to the dollar. Is that next? Yes, the dollar. So the dollar is looking fine. This trend on the daily time frame is fine. The bigger picture, what we care about the most is this area of demand and this area of supply. And now from a more minor trend perspective, this minor trend is fine. The daily chart is fine as long as we're moving sideways and higher. You can see how so far all of the back tests of this prior high, 102.830, the daily no change level essentially is holding right now. Right, and so as long as that's the case, then these buyers should be trying to move up to this key structure here, which has been problematic for the buyers since November of 2022. So basically all of this price action has been dictated by this area of supply and this area of demand. Okay, so if you're a dollar trader, bottom fishing off of these lows is a totally fine, very reasonable thing to continue doing, something like this. Bottom fishing off of these lows, knowing that as long as they don't trade through this guy, they're doing fine. right? And you should be looking to test the other sides of this range. Try to come here first. Try to get there next. And if you break out of this guy, you just move that structure, all of this above. So if we see follow through on Monday, clear it, back test plays off of this guy become reasonable. You just move it on up, right? And you're still looking to get to here, still looking to get to here. Same deal, yo. Oops. Okay, so that's pretty much it. And if the dollar does get going here and start ripping, then obviously that'll put some pressure on the asset buyers, which are kind of in, again, they're kind of hot right now, right? So for them to pull back, even to go sideways for a bit, would be pretty reasonable, not that big of a deal. Okay, that's pretty much it for the dollar. Moving on to the VIX here. So the VIX is still pretty low reading. This is not a very high volatility environment as of right now. And so obviously if the market continues to rise and the VIX starts to rise, then that'll let us know that, okay, people are starting to hedge their bets a little bit, more fear is starting to enter the market, and people are starting to be a little bit protective, a little bit more risk off. But as of right now, there's no real sign of that. So a lot of, pretty much, again, no red flags, right? As long as these SPY buyers are holding SPY, QQQ, the Dow, IWM, well, not IWM, but Dow, all of these guys, as long as they're holding over the daily no change, no problems, right? So moving on to Bitcoins. So Bitcoins, this trade idea was created back in I forget, I think this day, December 22nd, we had this marked up. I believe it was on one of our live streams. So this one has been sitting in the books for a long time. String Report subscribers, you've already known, we've been talking about this for a long time. You've had a lot of time to decide whether or not you wanted to take this trade. This trade zone was just based off of the idea that this is the key structure acting as demand over here, and this is the key structure acting as supply over here. So if you just zoom out and look to the right here, you can see how all of this price action has been dictated by this guy and this guy, correct? And so we zoomed in a little bit and we knew, okay, well, here's the daily no change level. This was the last meaningful daily breakout. As long as the sellers couldn't get back under 38454, then these buyers should be trying to come back up here, 12.5 to 12.5 to 1.4 supply. Now, that being said, this little break into it with no follow through is a bit of a red flag. And now you're hanging out over here testing this high volume area. There's no guarantees. You could very easily be setting a weekly lower high. It is possible. Anything under 49102.29 is going to be good for it. And so if you did take this trade zone, subscribers, or anybody in our chat room, because I've been talking about this on the streams as well, then you should have already chopped this up. You scale in, or whatever, however you choose to initiate. If you took a day trade or something like that, chop it up here because this is where all the volume is. Start to stop under there, right? And then if it comes back in, stop out, no problem. You book a little small win. And if you don't see follow through back into here, you can still be looking for plays. So for example, if you see this, let's say you're already positioned, you get stopped out, it goes into this guy, this key area of demand, local demand, but you don't see follow through, pop back above, okay, this trade zone is right back on the table again. All right, so basically, as long as we're holding over this daily no change level, they should be trying to come here. Whether or not they get there, we never have any idea, but we do know what they're trying to get done, and that's what matters the most. Knowing what buyers and sellers are trying to get done will allow us to position where it's cheapest to find out whether or not they'll succeed. We never know if they'll succeed. We don't get to decide that, but we can decide where to take your shot. It's just like basketball, football, whatever, any sport. You don't get to know if you're going to make that shot, but you can increase your odds by making sure there are no defenders around, by making sure you've practiced that shot from that location many times, etc. So that's the idea. Daily higher low has now been set here for Bitcoin at 41846.04, and got a break over 43872.99 to continue this daily uptrend. If they do break to higher highs, they should be trying to come here next, 44997, and then 46381, but really 46979 is the key, this point of control. They want to flip this guy, which has been problematic all the way since back here in 2021. Flip this 46979.22 level into support. That would open up this 1116 to 1120 to 122 area. Okay, so that's it for Bitcoins. For Ethereum, you got to call it for what it is. It does not look so good, right? It looks, that's weird. I thought I had drawings on this one. Maybe it must have been a different chart. Bitstamp. That's weird. Okay, that's weird. Okay, that's odd. My drawings are gone. I must have deleted them by accident. All right, so let's just remark it up. So as of right now, Ethereum, the key structure that is supporting price is this guy over here, right? Where are my drawings? Why are they gone? It's weird. Okay, so obviously this guy has been super key, supporting price for quite some time now. Right, pretty much a perfect hold of the value area high. So this is kind of a red flag, right? The fact that you break out, then come right back down into this range, bit of a red flag. You reject, you don't even get back to this prior low. The buyers have yet to come back to this prior low here. Again, bit of a red flag. If we zoom out, we're probably using like all of this guy as our reference. We can use this fella. I think is probably a pretty good guide right now. Okay, why are we using this guy? Because he was problematic here, supportive here, supportive throughout all of this. And then if we zoom out, I betcha it's telling us a pretty good story over here as well, right? Value area high rejection, value area low, excuse me. Rejections, move up, try to get to the POC, reject. And now that we're back under it, again, bit of a red flag. So as long as these buyers cannot overcome this level, this is essentially the daily no change level right now. If these buyers cannot get back over 2412.40, that's a bit of a red flag for Ethereum, which kind of has a head and shoulders look to it. And whenever you have a head and shoulders like pattern to it, you just want to mark up this guy because this is the key supply right now. This is the head, the tip of the head, the hair of the head or whatever. And as long as these buyers can't overcome this head, then the head and shoulders is still in play. Okay, so first things first, 2412.40 and then 2570.27. These two levels are going to be super, super key. So an aggressive seller, you can be looking for a sell to come back down here because this was a failed breakout here. This was a failed breakout, and now we're back under here. So an aggressive seller, you can be using this whole area pretty much and trying to come down here. All right, so if you're bearish crypto, this is very reasonable, right? Because again, if they can't clear this area of supply, then you're potentially looking at a weekly lower high. Well, actually, it's not moving up for a weekly lower high yet. But if we close right here, break this, then all of a sudden you're looking for a weekly lower high, right? It's aggressive, right? Because bigger picture, these buyers don't really have that much to worry about. Monthly trend is actually monthly is lower high, lower low, straight into a higher high. But the idea is, the trend is okay right now because we are still moving sideways and higher, sideways higher, sideways higher, sideways higher, sideways higher. This is the first time that the sellers have been able to come back down into a prior structure. So are they going to see follow through on it? Again, we do not know. Is this a pretty reasonable trade area? Yeah, it is, because as long as they can't overcome this, daily head and shoulders is in play. If they don't come up here, then they're going to try to come back down here. So something like this is pretty reasonable if you're looking for a sell in Ethereum. Okay, so CCJ is one of the sectors that Uranium has seeing a lot of attention as well. So we have earnings coming up soon, so I'm definitely not going to be doing anything in this name in the short term. But you can very clearly tell how this guy is super key. This let's see, from 2006. Wow, this guy over here, all of this supply is super, super key. You can see how the value area low rejected price here, right? They try to find acceptance over the value area high. They cannot roll back down under it, come back out to the side here. Problematic. Grind it for many sessions. Finally, once the value area low is supportive, then we move up to the point of control, then we move to the value area high, oscillate around, etc. And so basically holding over the value area high is going to be the best case scenario for these CCJ buyers. So what I'd like to see from earnings is honestly a dump. Like if we come down here and dump down into 38.87, but don't lose this guy, right? Because essentially this guy is a pretty good proxy for this point of control. If they don't see follow through beyond this area of demand, then they're not going to come back down to the value area low, which would then be pretty much a sloppy hold of this point of control. So I would love to see a dump. And that's pretty much it, because there's a lot of space to, well, actually monthly. There's a lot of space for another monthly higher low. I don't really care about these little rinky-dink ones. For me, the last one, meaningful one, was 23.69. So anything over that's going to be good for a monthly higher low, and obviously we don't want to come back into here. So for CCJ, I'm not too excited about this one. I'm kind of more focused in the AI space right now. There is a this week's novel ideas for Swing Report subscribers is another AI pick. Last week was another AI pick. But basically we're going to keep staying focused on these hot sectors to leverage, Dan's intuition and his strength in trading hype markets. So we're just kind of trying to build on that because the alley-oops, so to speak, as we call them, have been going really well. This is getting to be pretty long, so let's hurry up here. And then finally, we just have the, let's see, NVDA. NVDA is obviously, we'll cover this guy regularly because it's, you know, our AI pick. And so, let's see, and so, yeah, and so, we just want to use NVDA as a bit of a proxy, right? Because as long as NVDA is strong, then, you know, they're riding the AI hype train as well. So again, we'll just use it to keep tags on the AI space. And as of right now, there is really no red flags for NVDA. It continues to rip into all-time highs as long as this little daily demand is supportive and these buyers are doing just fine. There's space for a higher low to be set over 607. And so I guess we can mark this guy up, and this guy is going to be super key going forward. As long as these buyers can hold over here, then they have nothing to complain about. Because remember, the trend is fine as long as we're moving sideways and higher. Okay. Earnings coming up soon. Wednesday, the 21st, according to TradingView. Definitely double check that. But yeah, as long as NVDA is ripping, we're gonna stay focused on some AI picks for potential laggard plays. And then USMJ, MSOs in general, also seeing a lot of attention right now. This was just for subscribers, set up for a subscriber. We don't need that right now. So the key structures that I'm looking at for MSOs is from way back when over here. I don't have the dates marked up here. Let's see. So this one is 22/10/18 to 11/10. All right, so I'm watching this guy because, well, that's just the next area of supply that should be meaningful. You can see how price pretty much backed off right off of the value area low of it. There's a good amount of space for another daily higher low to be set over this little rinky-dink one here at 9.13. But I think basically that, you know, if you're looking for MSOs plays on a pullback, oh, that's weird. MSOs, must be my wife on the laptop or something. How dare she? How dare she use my... So we've got space for a higher low over 9.13. Anything over that's going to be good for a daily higher low. But I would say as long as we don't come back down into this, basically back test of this area is going to be key for MSO. So if you're looking for plays or whatnot for like a weekly higher low, because there's a lot of space to set a weekly higher low over 5.99, the best case scenario for these buyers here would be to hold these lows. You don't want to come back under these lows here, right? Because now that you've worked your way back into this guy, apologies for missing this, back under this guy, right? This is going to be super key. You want to stay in this structure because this is the key area of supply. This is a big block of weekly supply. And so if these buyers can make, the more acceptance they can find over 870, the more likely they are to test the other side of supply at 1431. So if you're looking for, you know, a shorter term, like a weekly higher low or whatever, this is really where you want to be interested, right? Something like this. You don't want to come too deep into this guy. And if they do hold this area, then they should, like I said, they should be trying to come to the highs of this range. And I would say something like this is a pretty reasonable target because this is the key area of supply that made these highs here, right? If we mark this up here, right? Very clearly telling you it's important. Very clearly telling you it's important. So, yeah, so I would say then that if this area holds, something like this, very reasonable, you should expect them to try to come here, something like that. Okay, so I think that is it. That is it. So this is probably what the new weekly videos will look like on the swing report. Obviously, there were some trade zones shared with you guys. However, if you would like, you know, play-by-plays and specific picks, updates from Dan, updates from Joey and Lori, if they contribute any ideas, updates from myself very regularly. That includes these updates for macro ideas and also for more active traders as well. I will share, you know, trade zones very regularly. If that's something you're interested in, then give this report a shot. If it's not, then that's fine as well. Thank you for watching. I appreciate it. I hope these videos are of value to you. I appreciate you sharing some of your time and energy with me, and I hope to see you next week. Farewell.